Hi, I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. Well, today, the day before Thanksgiving, not a whole lot going on anywhere, and volatilities are showing the same old thing that they've been showing for days and days on end. Today, it seems like performance anxiety is kicked in, volatility really doing a whole lot of nothing as people just seem to have written off the rest of the year. However, there's a severe binary trade right now. Are we going to have a fiscal cliff or not? Are we going to have a recession or not? But right now, vols are saying a much different story. When you look at equity vol combining Dow, NASDAQ, S&P, it looks like implieds are down about 1% on the day. Rate volatility down about the same amount. Again, that's when you factor in 10-year, Eurodollar, sovereign credit, and the balance, about down 1% today. Gold, oil, copper, silver, all down just about 1% today. Again, day before Thanksgiving, people are maybe not scared, but people just have their hands in their pocket, don't know what to do until things get figured out in Washington. The only outlier today is G7 vol. The foreign currency vol is up today. It's hard to believe I'm actually saying that. I don't think I've ever said that, at least in the last 2 weeks. FX vol is up on aggregate about 1%, and that's when you include all the G7 vols. Right now, Australian dollar seems to be the firmest among most. What stands out today? Term structure in the S&P 500, that stands out, is steepening as we're seeing vols in the short dated months declining quite rapidly. So we're seeing a steepening of term structure. Also, Skew continues to flatten. That shouldn't surprise anybody, as most people have already hedged and are doing nothing but selling their hedging, monetizing their hedging to deeper or further out of the money strikes. Vol is down just a little bit. And lastly, what stands out is that equity correlations, the correlation between volatility of equities, top 50 stocks, and the S&P 500 is falling. It's fallen about 3.5 points today, down to about 58.8%, which is still a little bit high side of average, but it is dropping, just giving the severe unknowns and that the third quarter earnings are now in the rearview mirror. I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago.